Hello, and welcome to Virtual Investor Conferences. My name is Laura Hamilton, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from United Bancorporation of Alabama. Before I introduce our speakers, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a one-on-one meeting with the United Bancorporation of Alabama, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Mike Vincent, President and CEO, Leanne Russell-Jones, Executive Vice President and CFO, and David Stewart, Executive Vice President and Chief Credit Officer of United Bancorporation of Alabama, which trades on the OTCQX Best Market under the symbol UBAB. Welcome, Mike, Leanne, and David.
Great. Thank you very much for that introduction, and good morning or good afternoon, I guess, depending on where you are watching us from. We appreciate the opportunity to come to you today and introduce United Bank to you, tell you a little bit about ourselves, and kind of give you some background as to where we've come from and what we're all about. So I appreciate your time and your interest, and with that, we'll go ahead and get right into our slide presentation and begin our discussion. So again, by way of introductions, with me here today are a couple of the senior members of our management team. David Stewart is our Chief Credit Officer, and Leanne Russell-Jones is our Chief Financial Officer. Within the slide presentation, we do have bios for our entire senior management team. Collectively, we bring a pretty diverse background with over 125 years in collective banking experience to the team. So we're excited to have a really good level of talent here that helps drive our performance and works on our strategic planning. So to kind of tell you how what our background is like and how we are structured, the bank itself has been around since 1904. We have been working in rural southern Alabama for quite some time. We really have built ourselves initially as an ag bank. The very first loan that this bank made was an agricultural loan, and that tradition still holds today with a very robust agriculture portfolio here. If you know anything about South Alabama, it's very productive in both cotton and peanuts. So we have got a very strong relationship with our ag producers here. United Bank has 22 locations serving South Alabama and the Florida Panhandle. We also have a couple of commercial locations here in Atmore and in Birmingham. Asset total, we've grown at a pretty good clip over the last 5-6 years. We are just over $1.1 billion in assets. Also under our holding company is UB Community Development. That entity manages certain programs such as new market tax credits, capital magnet fund, community facilities lending program. And they've been very active since our designation as a CDFI some 10 plus years ago. And again, with offices here in Atmore and in Birmingham. The newest sub of the holding company is what was Town Country National Bank, is now called Town Country United Bank. This was an acquisition that was completed in July of 2021. It's a one-branch bank serving the Camden area of Wilcox County with total assets of about $130 million. It's always been a very profitable bank, very involved in the timber space with a very experienced lending group and long-standing customer base. So we think it's been a good fit to our overall mission. And speaking of mission, and I won't read it to you, but we have our mission statement and vision statement. But ultimately, what we do is try to bring strength and vitality to the communities that we serve. Truthfully, in rural Alabama, a lot of the counties and the census tracts that we operate in are underserved, they're economically distressed, and we try to bring the tools that we have as a CDFI bank to those locations to bring economic vitality and job growth as well. We have included a map in here just to kind of give you a sense of the diversity of our footprint. You see the northernmost location, that is Town Country United Bank. We have recently opened our first branch in Mobile County, which has done very well. So we continue to look for ways to expand where we operate and how we operate. So talking about the holding company, UBAB, we put some metrics in here regarding stock performance. I mean, obviously that's, is our responsibility to the shareholders. We want to drive quality performance, which then leads to stock growth. Looking at year-end 2022, we did close at $35.20 a share, which was an appreciation of just over 67% for the year. The stock itself has continued to appreciate in 2023 at last close right near $39 a share. So we've shown good quality growth, and I feel like we have rewarded our shareholders as we continue to operate. I put some metrics in here regarding dividend, and I'll break real quick and tell you that our kind of homegrown economic indicator is the frequency of trains that go by. We're right next to a train track outside our windows, so if you hear that go by, that's a good sign that that economy is strong here in South Alabama. But we have a approximately 1% stock dividend that was paid in 2022. It's something that we, over the years, have tried to strategically focus on and look to enhance the dividend yield as we go forward. And just a side note as well, we were just recently ranked number 9 in the 2023 OTCQX Best 50. We're very proud of that, especially across the wide, diverse industry sector that they are monitoring. So it's something that we are very proud of. To give you just a couple of highlights, something that was really a big item for us in 2022 was our involvement in the Emergency Capital Investment Program, or ECIP. This program is something that was administered through Treasury. The intent of the program was to support small businesses and consumers in lower income and underserved markets. We were able to participate in this program because of our designation as a CDFI bank. It was really centered around CDFIs and MDIs. Utilizing the tools that we have put in place as a CDFI was really why they put this program in place to leverage off of what we've already shown that we can do. And so we elected to apply for and then ultimately receive $123 million that came into the holding company. We issued preferred stock to the Treasury Department. Of course, obviously with any type of program like that, there's a lot of reporting requirements, and there's a big responsibility in how that money is utilized. But one of the drivers to take it was the low cost of that capital. There is no dividend for the first 2 years that we hold that, so it is at 0% to us for the first 2 years, and then after that, there's a cap of 2%. Depending on how the money is deployed, you can get that rate down lower towards 1.5%, but it would be a maximum of 2%. And we feel like for our communities and our shareholders, it would be irresponsible of us to not consider taking that. There's a lot that we can do and a lot we're planning to do with that money. Whether it's lending, acquisition, expansion, or the like, there's a lot of ways to deploy that kind of capital. To date, we have downstreamed some of it to both banks to just enhance their liquidity positions. We've been able to retire some trust preferred debt, and we've also been able to put some money into specific lending programs that we've designated as well. And David Stewart may be able to speak to that in just a minute or so. As a CDFI bank, it's also opened up some opportunities to us over the years. And like I said, we've been a CDFI now for, since before 2010. And so that's opened up several different programs to us that we've been able to be successful in and to leverage, one of which, as we spoke of, is new market tax credits. We have developed a pretty strong reputation, I would say, in the state and beyond with our department and that group's skill utilizing these credits. Just for way of background, those credits are awarded by the Treasury Department. It's a competitive application. But the intent is to basically take private investment and utilize them into low-income areas. We sell these credits that we receive to private investors, and we will put them into loan projects that are happening within our footprint and beyond. So essentially, we earn fee income by our involvement in there. So just to give you some numbers, from 2017 to 2022, we have been awarded $295 million in new market tax credit allocation, the most recent award being $45 million from last year. We take those credits and we monetize them or sell them to investors, as I said. So that allows us to earn fee income off of that. It opens up the door for us to be involved in the lending side of some of these transactions. And you see the average annual fee income was right under $3 million related to new market tax credits. The Capital Magnet Fund is another large area that we have gotten involved in. We from 2016 to 2022, we've received $18 million. Those work a little bit differently. Those are grant funds that come straight into the bank and provide income straight to our bottom line. Those are available through the CDFI fund, and they support financing affordable housing projects. We have been able to utilize those across the state and beyond the borders of Alabama at this point. We have, because of that product, we've got $43 million in loan commitments for 2022. The key to those two programs is actually having a staff that understands them and can administer them, and it's very difficult. The barriers to entry are very high with both of those. We have developed a strong team, and we are continuing to add to those teams as that piece of the portfolio continues to grow. And one other thing that we also are involved in through UB Community Development is what's called the Community Facilities Lending Program. This is established basically to provide funding in rural areas, and we use it targeting census tracts and counties that have tremendous need. It provides us the opportunity to provide long-term fixed rates for, and it's just as the title implies, community facilities, whether it's fire trucks, fire stations, police stations, hospitals, things like that. That it allows the bank to provide long-term funding. We have got a locked-in fixed rate cost of funds of just over 2.3% that allows us to lock loans in for up to 30 years. It's an advantage that most banks would not have, and we've been able to use it fairly successfully. Just in 2022, we closed just over $15 million in loans related to that program. So as you can see, our CDFI designation makes us unique and provides us lending opportunities that many others do not have. On the next slide, we graphically wanted to show you kind of the map footprint of where some of these programs are related. So while our traditional bank footprint is South Alabama and the Florida Panhandle, you can see that we have done programs and projects all throughout the southeastern United States, extending from Louisiana to Mississippi to Tennessee, Georgia, Florida, all of the above. And the benefit to the bank is fee income. The benefit to these communities is even greater. We're able to provide affordable housing, jobs, economic stimulus, and vitality to areas that really truly need it the most in the country. So we're proud of that we can bring these not only to our hometown, but to our states and our neighboring states. The bank itself, United Bank, through our participation in the CDFI programs, has opened up several other programs to us as well. And we've listed a few of them here for you. The Financial Assistance Award, or FA Award, BEA program, which is Bank Enterprise Award, or a small dollar loan program. These different programs, as you can see, provide opportunity for us to offer certain credit products to those in our areas. And over the years, we apply for each of these on an annual basis. For the FA award, we've received 3 awards now, totaling $2.2 million. The BEA program, we've received in total $1.3 million just since 2016, but we have been receiving that award now since about 2011. So for quite some time, we've been successful year in and year out. And the small dollar award program as well, $122,000. These programs are important to us and they're important to our customers because it allows us to perhaps make consumer loans to customers that have credit challenges, that need credit counseling, that need a little bit of help to stay away from payday lenders and other types of institutions. They enable us to be involved in first-time homebuyer programs. They allow us, to support our communities in other ways, as well as, the most distressed of customers, and it kind of gives us an in where maybe banks won't see them as an opportunity. We do. So, kind of rolling forward, we've given you just a little bit of an outlook on United Bank loans and deposits. One of the benefits that we've always had is that we've had a very diverse loan portfolio. As I mentioned, we're not concentrated really in any one area. Another benefit of the bank is that our deposit mix, we have always had a very strong non-interest bearing core, keeping our cost of funds low as we can. We serve a lot of different areas, some of which are more mature in nature, some of which are very competitive in nature. And we've done a very good job over the years of keeping core deposits and keeping our cost of funds low. We've got a similar slide in here for Town Country United Bank. They're a little bit different. They're more heavy centered in timber and real estate. Their deposits are a little bit different, heavier in CDs than United Bank, but it's still good core stable deposit base. And frankly, the bank of choice in that market. We put a slide in here in the counties that we operate in across Alabama and Florida. This is our deposit market share. And if you see the banks that are ahead of us, while I may not like it, I can understand when you're up against regionals and large national banks, that puts us in a pretty good place. Like I said, there's a lot of banks in our market areas and a lot of options that people have. But we're proud of this fact, and obviously we want to continue the trend. So with that, I'm going to ask Leanne if she'll maybe talk through some of the metrics, and then David will speak to our loan portfolio a little bit.
Sure, thanks, Mike. The slide up right now shows a 5-year trend analysis on several different metrics that we measure and monitor, and I just wanted to touch on a few of those. One being the Tier 1 leverage ratio. You can see at the end of 2022 that leverage ratio was 18%, which is up about half really from the prior year, and that is obviously due to ESIP funds. So we have a very strong capital position going into 2023 and all the kind of chaos that's going on right now. In addition, Mike had mentioned downstreaming some capital to both United Bank and TCUB, as we like to call it. And we did that with the ESIP funds. So we distributed $20 million to United Bank and $10 million to TCUB. That $20 million obviously, and the $10 million helped offset any AOCI positions, that negative positions that we have. So we feel that was a way that we were able to shore up our equity positions. Another item I'd like to point out is the cost of funds and the net interest margin under the earnings and performance ratios. Our cost of funds at the end of 2022 was 33 basis points, and you can see that's been pretty flat, at least for 2021. It had peaked a little bit in 2019, but back down to 33 basis points. That has always been a strength for us, is cost of funds, and rolling into this year, we've been able to maintain that position. Our net interest margin, and you'll see this on the slide later on, was 3.71% as we ended the year this year. And really the fourth quarter, if you were to look at a quarterly breakout, you could see that we really broke out really from peers because of our cost of funds and our loan yields. Our margin exceeded our peer group by a large margin. So anyway, so that's been a strength for us going into 2023 as we're looking at rising interest-bearing costs and loan yields, and not sure what's really going to happen in some instances. So those are two strengths for us going into the year. If you'll flip to the next page, it'll just do a graphic representation of the Tier 1 leverage ratio, and obviously you can see in 2021 that ratio did dip down, but that was because of the purchase of TCUB, and then 2022 just shows our ESIP capital. And then the next slide, David.
Sure. Hello, everyone. Thanks, Leanne. So this is just a graphical representation of our loan book over the last 5 years. As you guys can see, we've had strong growth from back in 2018. Product of several things. Number one, leveraging our opportunity with the new markets, being able to move into C&I and commercial real estate transactions really help grow the book. Number two, also our capital magnet fund, allowing us to be more active within the affordable housing space and really drive loan growth in those spaces. Lastly, one slide we mentioned earlier was the community facilities program, allowing us to go into communities and provide fixed rate funding for infrastructure projects that benefit the community. So leveraging kind of those three things, along with our traditional market growth. We are in one good growth market in Baldwin County for the traditional bank, which stayed solid with a lot of competition for banks, sort of unique compared to the rest of the footprint. Allowed us to grow in that market. And then, lastly, just having had the opportunity to lend to certain spaces that other banks don't have the benefit of with some of those funding mechanisms that we discussed earlier. Loan growth from 21 to 22 was strong, at just shy of 10%.
So the next couple of slides are peer comparisons looking at 2022. You'll see on this slide core deposits to total assets. United has a very strong core deposit base. We have had for many years. And so we don't have a lot of rate sensitive deposits. So we think that serves us well, obviously, with our cost of funds and talking about deposit runoff and what's happening currently in the market. The other graph there is non-interest income. Obviously, our non-interest income at just shy of 80 basis points is really attributable to our CDFI income, which a lot of those programs come in as grant funds, as Mike mentioned earlier. So we think that is a strength for us also. And this is just looking at return on assets and return on equity compared to peers. Obviously, the combination of strong loan growth and non-interest income helps with both of those items. And this is the margin for 2022, just showing us against peers once again. We were better than peers for the year, and think that trend will continue on into 2023.
All right, and we've also just added a slide, just frankly to brag a little bit, but these are some of the awards that the bank has received over the last year through American Banker, Business Alabama, and then Newsweek as well. So as you can see, there's a lot of good things that are going on in an interesting time in banking. United Bank and Town Country United Bank have a lot of unique attributes to them. And it's always enjoyable to sit down and kind of tell our story. We do have several questions that in the few minutes that we've got remaining that we can go ahead and maybe talk through. One question that is mentioned is how does UBAB intend to capitalize on the capital from the ESIP program? It seems like there would be a lot of attractive acquisition targets in Alabama and the surrounding states. Yes. The answer to that is yes. It does seem like there would be, and there are. We've had multiple conversations. I will say it's an ongoing strategy that we continue to focus on, is our ability to attract an acquisition partner. It's one of the reasons that we acquired Town Country National Bank, and that there's another question asking about that. What attracted us to Town Country? Wilcox County is not a market that you would expect most financial institutions would have a great interest in. What makes us unique is a county like Wilcox County is not only one of the most, I'll say, it's one of the poorest counties in the state of Alabama, and by extension, it's probably one of the poorest counties in the country. But as a CDFI bank, that provides us unique opportunity that many don't have. To keep our CDFI designation, amongst other things, one of the things that we have to do is to continue to make loans and deposits in low to moderate income census tracts. Well, as we say around here sometimes, you can do well by doing good. And, bringing the CDFI tools that we have to those areas, it's a win-win for them, and it's a win for us. So it fits into our model, and so far it has been as we hoped it would be. It's always been a profitable bank. It continues to be a profitable bank. So as long as it doesn't jeopardize our CDFI designation or status, then I have interest in it. We left them as separate chartered banks initially. In all candor, they have had a management group that has been there together for some time. The president of that bank passed away in the middle of last year, and we are looking now towards collapsing that charter and combining both banks. I think that just makes sense. So the efficiencies that are gained, the cost savings that are gained by bringing them together really just makes sense. So that is something that we're under active discussion on right now. As we talk to various acquisition targets throughout the state, I think they're targets. They have to come to the realization that it makes sense for them. And right now, with the state of bond portfolios and AOCI issues, that is, it's impacting the pricing on deals. And one thing that serves us well, though, is as a ESIP recipient, that puts us in a position to buy a bank that maybe others will not. When you talk to the experts and you see what's happening, it's essentially ESIP banks and credit unions that are driving the lion's share of these acquisitions. So I think we're uniquely positioned, as we continue to have conversations, but it always is going to be predicated on that CDFI designation. And does it add value? Does it make sense? And most importantly, can the tools that we have, can we bring those to those communities and enhance what's going on in their individual towns? David, if you may want to speak to some of the lending that we've done.
Sure. So the ESIP funds we've set up with some of those business lines I mentioned earlier, different buckets, if you will. We've set up a product specifically for ag and timberland to provide some fixed rate funding, since our cost of funds is too low to compete in that space. Allows us to compete with some of the quasi-governmental agencies, your ag credits of the world. We've set up dollars to allow us to lend into new markets transactions. We've set up dollars to lend into the affordable housing space, as well as we've assigned a bucket, if you will, to the municipal and governmental sector. So we've seen some good growth in that last bucket here over the last 3 to 6 months, and continue to want to target those fixed rate funds, providing those to communities when the bond market is up substantially. Gives us a lot of opportunity.
We have a question here regarding what restrictive aspects of accepting the ESIP funds there might be. I'll say this, and I may ask Leanne to jump in here as well, but the restrictions are not what I would say are great. They're not great. There's a lot of reporting that has to be done on an ongoing basis, so that the Treasury understands how we are utilizing these funds. There are some expense restrictions and things like that they're beyond the ordinary course of operation that have to be considered. But all in all, it's a fairly open program. There's not a ton of, and Leanne, you may have some thoughts about that as well. But
No, I think you described it accurately.
okay. We have a question about what should investors expect in terms of dividends and buybacks in 2023. I'll speak to that with just a little time that I've got. We did have a buyback program in place this past year. We had not done a buyback program previously, really, and so it was fairly successful, I would say. We bought back about 188,000 shares of stock. And we've had continuing discussions about having something like that in place going forward, and I think it makes sense. The investors that I have spoken with, I know would like that, and it's something that we're having active discussions on as well. And I would expect to see some resolution on that in the coming months. As far as dividends are concerned, I mentioned earlier the yield of 1%. We have targeted really trying to push that up, and we have taken steps, I think, to work towards a more peer level dividend yield. Obviously we take it, quarter by quarter as we look at that, but in all candor, I feel like we've been too low in the past, and we've talked with investors about that, and I think the expectation would be that yield would continue to rise. Okay, well, with that, I think we are right on time. There may be a few other questions that are out there that hopefully we can get answers out to, and I know we are also are willing and able to meet one-on-one with any investor that would like to further the conversation coming up. And so we've put some website information on here for you for some additional information, whether it's quarterly reports, our annual report, or if you'd like to look at some of the projects that we have through UB Community Development. If you have any direct questions from us, any of the management team, you can reach out to Brian Bruley. That's BRIAN.BRULEY at unitedbank.com. And we certainly would be happy to respond or jump on a call as the need may be. So with that, we thank you for your attendance, your interest in the bank, and hopefully we can talk again soon. Thank you.